The post-2008 Irish economic downturn coincided with a series of banking scandals, followed the 1990s and 2000s Celtic Tiger period of rapid real economic growth fueled by foreign direct investment, a subsequent property bubble which rendered the real economy uncompetitive, and an expansion in bank lending in the early 2000s. An initial slowdown in economic growth amid the international financial crisis of 2007-08 greatly intensified in late 2008, and the country fell into recession for the first time since the 1980s. Emigration, as did unemployment, escalated to levels not seen since the decade. The Irish Stock Exchange General Index, which reached a peak of 10,000 points briefly in April 2007, fell to 1,987 points, a 14-year low, on the 24th of February 2009. In September 2008, the Irish government, a Fianna Fáil Green coalition, officially acknowledged the country's descent into recession. A massive jump in unemployment occurred in the following months. Ireland was the first state in the Eurozone to enter recession, as declared by the Central Statistics Office. By January 2009, the number of people living on unemployment benefits had risen to 326,000, the highest monthly level since records began in 1967, and the unemployment rate rose from 6.5% in July 2008 to 14.8% in July 2012. The slumping economy drew 100,000 demonstrators onto the streets of Dublin on the 21st of February 2009, amid further talk of protests and industrial action, with the banks guaranteed and the National Asset Management Agency established on the evening of the 21st of November 2010. Then Taoiseach Brian Cowan confirmed on live television that the EU, ECB, IMF Troika would be involving itself in Ireland's financial affairs. Support for the Fianna Fáil party, dominant for much of the previous century, then crumbled in an unprecedented event in the nation's history. It fell to third place in an opinion poll conducted by the Irish Times, placing behind Fine Gael and the Labour Party, the latter rising above Fianna Fáil for the first time. On the 22nd of November, the Greens called for an election the following year. The 2011 general election replaced the ruling coalition with another one between Fine Gael and Labour. This coalition continued with the same austerity policies of the previous coalition, as the country's larger parties all favour a similar agenda, but subsequently lost power in the 2016 general election. Official statistics showed a drop in most crimes coinciding with the economic downturn. Burglaries, however, rose by approximately 10%, and recorded prostitution offences more than doubled from 2009 to 2010. In late 2014, the unemployment rate was 11.0% on the seasonally adjusted measure, still over double the lows of the mid-2000s but down from a peak of 15.1% in early 2012. By May 2016, this figure had fallen to 7.8%. Background and causes. The economy of the Republic of Ireland expanded rapidly during the Celtic Tiger years due to a low corporate tax rate, low ECB interest rates, and other systemic factors. At the end of the third quarter of 2010, German banks had between $186.4 billion and $208.3 billion in total exposure to Ireland, with $57.8 billion in exposure to Irish banks. This led to an expansion of credit and a property bubble which petered out in 2007. Irish banks, already overexposed to the Irish property market, came under severe pressure in September 2008 due to the global financial crisis of 2007-08. The foreign borrowings of Irish banks rose from €15 billion to €110 billion in 2004-08. Much of this was borrowed on a 3-month rollover basis to fund building projects that would not be sold for several years. When the properties could not be sold due to oversupply, the result was a classic asset-liability mismatch. At the time of the bank guarantee, the banks were said to be illiquid by €4 billion. This turned out to be an enormous underestimate. Impact. The economy and government finances began to show signs of impending recession by the end of 2007 when tax revenues fell short of the 2007 annual budget forecast by €2.3 billion, with stamp duties and income tax both falling short by €0.8 billion, resulting in the 2007 general government budget surplus of €2.3 billion being wiped out. An imminent recession became clear by mid-2008. Subsequently, government deficits increased, many businesses closed and unemployment increased. The Irish Stock Exchange fell and many immigrant workers left. Anglo-Irish Bank was exposed to the Irish property bubble. A hidden loans controversy in December 2008 led to a further drop in its share price. The ISEQ dropped to a 14-year low on 24 September 2009, probably triggered by the unexpected resignation of former Anglo-Irish Bank director and Herati from the board of the Irish Stock Exchange the night before. Property market. Due to the ending of the bubble, the residential and commercial property markets went into a severe slump, with both sales and property values collapsing. Developers such as Liam Carroll began to fall behind on their loan repayments. Due to the financial crisis, banks such as ACC pushed for the revenue recovery and requested liquidation of the development firms. Economy. The Irish economy entered severe recession in 2008, and then entered into an economic depression in 2009. The Economic and Social Research Institute predicted an economic contraction of 14% by 2010. In the first quarter in 2009, GDP was down 8.5% from the same quarter the previous year, and GNP down 12%. Unemployment rose from 8.75% to 11.4%. The economy exited recession in the third quarter of 2009, with GDP growing by 0.3% in the quarter, but GNP continued to contract by 1.4%. The economy grew by 1.9% in Q1 and by 1.6% in Q2 of 2011, but contracted by 1.9% in Q3. Unemployment. The unemployment rate rose from 4.2% in 2007 to reach 14.6% in February 2012. Emigration. The Central Statistics Office estimated that 34,500 people left the country from April 2009-2010, the largest net emigration since 1989. However, only 27,700 of these are Irish nationals, an increase of 12,400 since 2006. It's also notable that more people went somewhere other than the UK, EU or US, traditional destinations for Irish emigrants.